following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, welcome to the early morning show on Monday, the 23rd of January. We're going to be taking a look at the German DAX, just like we always do. This is a 30-minute chart going over, oh my goodness, it goes over quite a bit now. How many days we got here? Wow. Looks like about 10 days. As you can see, we've been in this really tight trading range at the 78% level, which came in at 11,700. We've just been going backward and forward, much like we have in the USA. There's only one really big market nation or globally that is turning the corner, and that is the Nikkei. The German, whoa, let's go back there a little bit. It is the Japanese stock market is down 1.5% today, and it has been going down. It topped about 3.5 weeks ago, but it started, quickly to the downside. And that's one of the main countries you want to watch because they have a quantitative easing program like we do, and they put all their money in their own stock market. So that could be a very interesting thing to take a look at. We had a couple of questions this morning. The first one should be answered by Basil Chapman better than me because Basil knows this a whole lot better than I do, but I remember him talking about it several times. And that's General Electric. There used to be an adage in the market that as GE goes, so goes the market. If that's the case, and I don't know if that's the case anymore, but you can see we had this gap down here on Friday, I guess, on some bad news, but it had a head and shoulders pattern. If you look at this chart very closely, you'll notice that the left shoulder and the right shoulder are equal. They both come in at really nice Fibonacci ratios. And so this is saying that we have something possibly really negative happening here, with General Electric. Well, whether that still works or not, you'll have to ask Basil because I think it'd be a good idea to put the chart in. You're absolutely correct. Now you can see the head and shoulders pattern, and you'll see the 1.27 on the upside and the 78% retracement on the right shoulder. So that's how you try to determine that. Those patterns are all quantified in Andrew Lowe's book, the non-random walk down Wall Street, if you want to do the mathematics behind these. But boy, you better be ready because it's really heavy stuff. These are really big formulas that they have that are very, 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 very important. Now, someone's asked a question about when they do trade. Their problem arises after they put the trade on. They start thinking of all different things, and that's normal, folks. And the reason is you're probably looking at a monitor, and a monitor is not your friend. Mark Douglas told me this many, many times ago, but I will give you some free advice here from Mr. Douglas, who's no longer with us but still with us in spirit. If you'll just practice a little bit each day, try to stay away from the chart you're looking at for 15 minutes. If you're watching the euro, go watch something else. Go watch crude oil or go watch wheat or something else. Just get your mind off of it. That's the way to do it. You do that in 15-minute intervals, and eventually you'll get to 30 minutes or even an hour. I haven't got to the hour level yet, but I do check every 30 minutes, but I have alerts on that if something happens at a price level that I'm really interested in hits, then the alert will go on, and then I go to the chart and take a look at it. But it takes your mind off of actually watching this stuff, and that's what's important. In 1972, I had the honor of meeting Amos Hofstadter. He was probably one of the greatest traders in the world. I never got to see him trade or anything like that. I got to meet him a couple times over the years, but he trained so many people, just unbelievable. Bruce Covener, Ed Secota, Mike Marcus. I mean, all these guys were at Commodity Corporation, and they learned, through Amos Hostetler. Amos was killed in January 1975, I believe, at the age of 78 in a car wreck down in Florida. And he was taking a class in software programming at the time, so he was really on top of his game. But he was a broker with Hayden Stone. I think it was Hayden Stone, and he was the one that helped put together, Commodity Corporation with Helmut Wehmeyer and Milton Friedman. But basically, when I saw him the first time, I was with my best friend Jay Crosp, who also worked with Amos for many years. He started with Commodity Corporation in '66. They started in '64, I believe, and he was one of the programmers. And Amos was there, and he was hand charting a 15-minute chart on pork bellies. We had the Bunko Ramo boards. We didn't have all this fancy stuff that we have now. And he was doing a 15-minute chart on pork bellies, and he had his little system of point and figure that he liked. And he was doing that. And Jay asked him, he said, why are you, looking at pork bellies here so intently on a short-term chart? And he said, he pointed to the position, his equity run on the left-hand side on the little table there. It was about 8 inches thick. He said, I've got so many positions on in soybeans and soybean oil and soybean meal that I have to take my mind off of what's going on because I don't want it to affect my opinion of what's going on in the market. He said, by sitting here and looking at this chart on pork bellies, my mind is focusing on these pork bellies, and I'm not thinking about what's really going on in the market. And that's what really gets you in trouble. It's not how you think, it's what you think. And that's the main thing that you want to I said that wrong. Let's get back. It's not what you think, it's how you think. And that's the main thing that I learned that very, very quickly. And it wasn't until 20 years later, that I met Mark Douglas, and he informed me of the importance of what Amos had said. So that's a good thing to remember. But you can't get over it overnight, folks. You have to do it in baby steps. If you're watching the market, on a 1-minute chart, which is insanity, or 2-minute chart, which is close to insanity, you're going to drive yourself crazy because these markets, they are predictable within 2 minutes, but it's very difficult to trade just getting executed. So try to wean yourself away from the monitor a little bit each day. Start with trying to get away for 10 minutes if you can, and then go to 15 minutes, and then go to 30 minutes. You can still put your limit minders in, so if prices are hit, like your price target is hit or your stop is hit, then you can go to the chart and take a look at it. But until that time, watching the monitor really doesn't help you very much, because if you're long, you focus on upticks, and if you're short, you focus on downticks. And the reason for that is our bodies are programmed to prevent pain. And when prices go up and you're short, that's pain. And when prices go down and you're long, that's pain. So you don't focus on that. So looking at it doesn't change your mind. I have some really bad news for most of you folks out here today. The market really doesn't give a hoot what you're doing. They really don't. They don't care what Larry's doing, or Basil, or Steve, or John. Well, John Logan they would, but nobody else. So pay attention. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted a chart from one of our listeners in a far distant country showing the relationship of the election with Donald Trump. I'm sure this is, I don't think it's going to hit the internet big time, but it is rather funny to take a look at it. And a lot of it is related to the emotionalism that went in, because whenever there's a big surprise like this, like there was with Brexit, I mean, Brexit was actually a much, much bigger surprise. Well, no, that's not true. Nothing could be bigger than what happened, I guess. But I happened to be in London during the time pre-Brexit, and I'd met with some people who assured me that they were going to leave Brexit, that it wasn't even going to be close, and yet the bookmakers there were giving 8-1 against Brexit leaving, which was, really an amazing thing considering what happened. Fortunately, we happened to be short the pound during that time, and it was at 150, and it immediately dropped to 138. It dropped 22 handles in just a matter of a few minutes, and then of course went down to the 119 level. And now what's happened is the British pound has rallied all the way back to a 61% retracement of that previous high that we made after the first bounce. That was up around that 133 level, and it's held so far that level. So watch 125 in the British pound. That's going to be a very, very interesting picture to look at. Actually, the actual number is 124.75. So watch it, because it could be a very interesting one, to look at. That relates to the dollar index, of course. And the fact is, let's just pull up the British pound. In fact, we hit it almost exactly this morning in the British pound. We missed it by about 5 or 6 pips, I believe. So keep an eye on this, because this was the 61% retracement of the high from December the 2nd. And it is spot on, and it is also a small butterfly pattern sitting there in the British pound at that same level. Since we're talking about the British pound and currencies, we might as well take a look here at the euro, because this is one of the ones that we talked about on Friday. As you can see here, the market opened higher this morning, and we got up to almost the exact level here. We got up to 107.60 in the euro. We needed it to get 107.70 within about 10 pips. We've only backed off a little bit, but there's some really strong resistance. And here again, you can go back and see that the 78% retracement of this, going back from December the 7th, comes in exactly at that same level, which means you have a 3 drive to a top pattern here. This is a 4-hour chart, of course. You have a 78% retracement from December the 7th, and you have 2 ABCD patterns confirming that this is a very, very important spot in the market to really watch this euro and British pound, which we've been saying all along in the dollar index, because the dollar index, once again, is down, testing the 104 level. You can see this from what we talked about, on Friday. We're down to 104. So we're either making a double bottom here at the 78% level, or we're getting ready to break out in the British pound and the euro and the Australian dollar and the Canadian dollar, all of them. So this is a really big point here that we're watching here with this U.S. dollar. If you had to put a gun to my head, like they did in the movie The Godfather, make him a deal he can't refuse, I would have to say that the dollar is going to come down to about 97. That's what I would say. That would bring the euro up into the 112, 113 level, in my opinion, and then we will see what it'll do from there. Remember, we have a lot of people on the phone and coming to the United States talking about trade. All these things will be reflected in these currencies. So, don't fall asleep at the wheel, because there's a lot of things happening that will make these things jump around quite a bit. Now, we've had a question from one of our listeners, and he dropped me an email asking me the relationship, if there is any, between 1929 and the stock market top then and the one that we had if in fact this is a top. And I'm going to try to answer this because I don't know the answer, but all I do is I look at similar patterns. And if you go back to 1929, you can see that from August through September, that it topped on September the 3rd of 1929 at the price of 383. And then, of course, it went from 383, it went down to 41 on July the 8th. Thank you very much, Basil Chapman, for the correction on that date. It bottomed on July the 8th of 1932, and that was actually the start of the Big Depression. I mean, well, it started in 1930, but the rough years were 32 through 38, and then, of course, it was the war, World War II, that started in 1941 that got us out of this. But the market rallied for just about 5 weeks into that high. Now, the percentage that it rallied during that high was not as much as we rallied here after the election rally. The election rally was roughly 15%. I mean, some of the stocks went much greater, like the Dow and some of those things, but the actual market was up around 10 or 15%, from the lows. And remember, this is all related to the fact that most of these charts that you're looking at are related to what they're telling you in the news about the Dow Jones. And here again, if you look at the Dow Jones, you can see that 15 of those stocks, the Dow moved 2,000 points, 15 stocks took the Dow 2,000 of those 2,050 points. So this is telling you that there's some really discrepancies here when you're using just a price-weighted average. That's the main thing that you want to keep an eye on. So watch that. In fact, you're seeing it again. You just saw it in General Electric, but see, General Electric's not going to affect the Dow very much because it's trading for 30. Look at IBM. IBM is 5 times that much. Goldman Sachs is 8 times that much because it's price weighted, and that's what's the real important thing. Now, as we came in this morning, this is one of the things that we talked about in the newsletter this past weekend, is that we had an unusual situation where we had multiple sell signals coming together. You can see the cash S&P making that 135 pattern. absolutely perfectly. And if you take a look at the Dow Jones E-mini, you're going to see again what it's doing. It's making a 135, and you can see the weakness in the Dow, how much weaker it is now. And it had been the leader of the pack on the way up. So it's also doing that same type of pattern. But if the Dow gets up, more than 50 points today, this will all be a failed pattern. So remember, these patterns do fail. And if we take a look at the New York Stock Exchange Index, what we're going to do right now is we're going to take a look at that. Again, you're seeing the same type of pattern with the ratios put in, and you can see the exact 61% retracement there on the 19th. If we get below that, then you're going to have a pretty good correction to the downside. But that would mean the Dow would have to be down about 100 points, and then it would start to break out to the downside of that level. But right now, it's just in a very, very tight trading range, not really doing very much at all. So those are the main things that you want to be talking about. We've got a break coming up here in a few minutes, and when we get back from the break, we want to talk a little bit about the volatility index, because again, they're telling us that it is no good. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to revisit the volatility index here. I have an interesting chart to show you from top-down charts. Hold 1 second, please. And I want to bring this up so you can take a look at it. This is a really long-term chart here on the VIX going back over the last 16, 17 years. You can see the bottom in 2000 and some of the big spikes that we've had. Of course, the big spike was on March the 5th of 2009 when the VIX got to, I believe it got to about 92, as I recall. It was some ridiculous number. And now you can see we're breaking down into new low grounds, and everyone is telling us that this market is finished. It doesn't really measure fear and greed anymore. 1 second. Need to get some water. Hold on. And then from that fact, we'll see if the VIX index really does this. But every time they've said this in the past, it's been just been pretty good. Okay, the question is, the VIX and VIXI are both instruments of trading. Correct me if I'm wrong. They both trade the S&P short-term futures. I'm not sure of the relationship. All I know is the VIX is the volatility index, and the VXX is the, one second, is the weight, the difference. What the VIXY is the ETF that trades the volatility index futures that are listed at the Chicago Mercantile Exchange. The VXX is the ETF that trades the index itself. So that's really the best way. The best way to do that is to go to www.cme.com, and they will give you the information on what the specifications are and stuff and such like that. The question Tony's asking is whether one is to trade better than the other. I wish I could answer that. I really don't know. Options usually don't work. If you buy an option, buy a put or a call, the odds of you making money on that is about 15%. But if you sell the call and sell the put, your odds of making money is about 85%. The only good advantage of buying a call or buying a put is at a time when the market is just totally out of control as far as on the downside or the upside, and the amount of money that you put into the option is so small on a relative basis to what you could make. That's the only time that I would ever use an option to do that. So that's the reasoning behind it. It's the amount of risk that you have to take, and the fact that you get to hold it for 2 months with virtually no risk involved. That's what's really good about it, because if you would have done this, back in 2009 or 2000 and done something like that, those returned, many, many times over. The problem is you don't know whether it's going to work or not. You're only dealing on probabilities and risk control, and with the option you have, about as good as risk control as you're ever going to have. So that's the main thing. Whether you use the VXX or the VIXY for these trades, I think it does matter because the VXX is very liquid. The VIXY trades a couple million shares a day, but it's not nearly as big as a VXX, as it has a much bigger participation, and it has better options and better strike prices and things like that. The options on the VIXY are very, very thin, and you can't really use those at all. So that's the reasoning for that. So that's basically, what I'm trying to do is to show you the relationship between this. If we take a look here, just for an example here, just look at the VIX here on the weekly basis. What we're watching here, you can see from the 2014 low to the 2015 low and the 2016 low, or 17 low, it just came in here on January the 8th. Or 9th, made a little lower low last week, was a 1.618 expansion of those. And you can see the 1.618 expansion on the first one in July of last year. The VIX went from about 55 to 126. I mean, that's a lot of money, folks. I mean, when you put up a very, very small amount, that's what makes it interesting. It's just a pattern. I don't know diddly squat about the fundamentals. I've never said that I do. All I do is I look at the patterns, I look at the ratios, and if it gives me an idea of where it should be, then I'll quickly take a look at it to see if it works. But that's the bottom line of what we're watching when we're doing this. I hope that answers the question. Remember, I'm not an options specialist, but I do know the difference between buying calls and buying puts, because when you buy an option, you are buying something that is decaying in value. And the statistics behind it are just absolutely unbelievable. If you learn to be an option seller, in other words, you sell calls and sell puts and take in that premium, you are going to be successful. The problem is, one of those times, 1 out of 10, the option is going to catch you by surprise, and it's going to hurt you really bad. So the rule of thumb is, and I learned this from Larry McMillan, who wrote the books on these things, is if the option doubles, the option that you're in, if it doubles or triples in price right after you get into it, get out, because you don't know where it's going to go from there. And those are the ones that really, really hurt you. And, that's the problem with option selling, is that you're exposed to unlimited risk, but you have to protect yourself. And the way to do that is when the option doubles or triples in price, it can really, really do something really bad. During the crash of 1987, those fellas in those option pits, they didn't have any idea where the market was, and some of them got buried to the point that they never did get out of it. There were so many bankruptcies after the market closed that day that it was truly amazing to watch this. Okay, we've had a question about the stock of Walt Disney. I'll bring it up here. We could take a look at it. As you can see here, a week or so ago, Walt Disney made a 61% retracement of the high from last October. That was at the 109.60 level. We're now trading 107 and change. So these are some of the things that you want to keep an eye on as you watch this market unfold for today. I have to do something quickly here before the next break. I have to check on a particular stock that we're watching. Hold on one second just to see what's going on, and I can tell you what not much is happening, I can say, because of the fact that nope, not much is happening. Anyway, I'm watching these a couple of stocks that look very, very interesting in here. As far as the S&P, we should have some pretty good resistance at the 2268 level early morning. Whether that's going to be much or not, remains to be seen. Little by little, we'll figure if that's going to be the case or not. But keep an eye on Netflix, folks, because that's got a possibility to do something really crazy. I'm not making this as a recommendation here, but watch this stock, because just for just general entertainment, if nothing else. If you look at Netflix here, you'll see that the Netflix has a potential up here for an island reversal pattern. You can see it after the earnings that came out on Thursday. The market closed right on the low of the day on Friday. And then you can see what happened. What you're waiting for is to see it gap down some morning, leaving an island up there. And just like it did on the bottom, look at the island that it made back in July. Same type of thing. Big time signal.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I wanted to bring our attention to one of our favorite people, Priceline Charlie. And I want to give me a second here to get this chart up here. We haven't heard from Priceline in quite a bit, but we're seeing the same pattern in Priceline that we're seeing in some of these other things. This is that 135 pattern. This is a $1,500 stock. It does have options, and unless you're very, very heavily not leveraged, but capitalized, you certainly don't want to touch this. What's really nice about this is the pattern is so beautifully symmetrical. You can see from January to June, the market was up 96 days, and from June to November, it was exactly 96 days to the top, making an absolute perfect ABCD pattern. And it did back off a little over 10% from that level, and now it's completing this 135 pattern. If Priceline gets above this 1545 level, that would say that this pattern is certainly wrong, but right now it is still in that ballpark of being potentially correct. Now, I wanted to mention the Japanese yen here because, let's just measure the Japanese yen here, and then we'll get to gold and silver because I believe that we need to talk about them because they're at a real critical level, as they always are. But as you can see, this Japanese yen has a lot of support at 112. It has a lot of resistance at 115.5. This is going to be the thing to watch, but watch it if it backs off into that 113.50 level, folks, because if it does and holds that level, that could be a very, very low risk, very, very low risk spot to watch it from the for another rally, because it certainly looks like there's a possibility that we're at. But these currencies, folks, are getting ready to do something really dramatically. I don't think there's any question about that. Well, there's always a question about it. But if you look at the dollar index, the euro, the pound, the Canadian, the Japanese yen, they're all setting right at these key levels and patterns. They're going to get ready to either break down or break up to the upside. That's the bottom thing of what we're looking. All right, let's quick over to look at the one that I really have my radar on, and that is the gold and silver markets. We made a slightly higher high in one contract of February gold this morning by about 20 cents from our high on Friday. We did not do it in the lead April contract. I don't know if that means too much or not, but this is the pattern that I think we need to keep our eye on very, very closely, because the 38% retracement from our low in December, which, remember, that was the low that we made last December. This one came in at the 78% level, within $5 an ounce. The 38.2 retracement on this will come in around 11.83. And if you go back, and I would suggest you do this, go back and see the price action from December of last year and what happened to the, what happened this year. You're going to see very, very similar patterns where the market goes up and it starts making these equal pullbacks. And those are the ones you want to really watch. So we've got a 3.82 retracement at the 11.85 level. We have an ABCD pattern. We have a 1.618 expansion number coming in off of the lows of last week. That tells us that this 1185 is going to be very, very important. Now we're trading at above 12 now. Ideally, what you'd like to see, and we don't live in an ideal world, of course, but ideally what we'd like to see is the market to come down into the new moon, coming in here on the 27th, which is going to be the Chinese New Year, the year of the rooster, and the rooster likes to crow. So I don't know if that has anything to do with gold or not, but gold works very nicely off of new moons and full moons. And so we want to watch this one really closely later this week as we come into Friday, because if we do, we've got to watch this closely, because that would set up an absolute lovely pattern as far as from a bullish standpoint of buying a retracement in a bull market. And as you can see, these retracements that we've had ever since the December they've all been between $17 and $20, all of them. And so we'll be watching this one with a great deal of interest. We're doing the same thing in the currencies, in the silver, not so much in platinum. But what I would recommend, folks, is I would really recommend buying silver rounds, these little coins that are printed by either the government, U.S. government. They're just like silver dollars. They're beautiful. They're usually Liberty coins with this, the St. Gaudens picture of the statue or the Standing Liberty. And those are 1 ounce of pure silver. If you can afford it, I would recommend you buy an ounce of gold or two if you get a chance. If you can't buy a full ounce of gold, they have 1/4 ounce and 1/2 ounce bars or coins that you can get. They're easily assayable and everything, and it makes it very, very easy to do this. So keep an eye on that this is something that I really think you got to start thinking about. I've been doing this for, ever since silver was down around I think around $13 or something, to buy these, just to put them back and to keep them, because hard money hasn't been in vogue for a long time, and it's probably due to come back. And we'll see if this is going to be the case. Someone's asked me the ephemeris that I use. I use the daily aspectarian. That, the aspects that we talk about, and the Tarian, of course, is the teacher at Aspectarian. It basically shows all the aspects. The book has changed a lot, because what they've done is they put in these, I forget what, Bill Meridian could tell us what they are, and so could Shane Smolian, because that's his specialty. He's very, very good. But it's a daily aspect. It's called the Aspectarian. They give it from 2007 to 2020, and that's pretty much. Mr. Bill, you're asking a question. Did people buy silver when gold was out? I don't think that they did, Bill, because silver never really moved very much. It was always trading for about $1, $1.50 an ounce. But not many people turned in their gold back in 1932 when FDR confiscated the gold. Some people did, but not many people did. So for some reason, having that beautiful shiny metal in your hand is a lot different than holding a piece of paper that could burn up. So that's probably the reasoning behind that. So Oh, we got some really great information here from our good friend Steve Rhodes that January has 3P index dates, the 11th, the 17th, and the 27th. So that would be really interesting to watch. And the 27th has got to be a big one because of the fact that we're looking at the spot where we're looking at a really good, new moon. By the way, one of the questions, I'm not going to be able to answer it today. Yeah, I can answer it at the break, but someone asked me who was the best trader that I've ever met in all of my years in this business. And believe me, I met some really, really good ones, but hands down, without even thinking twice about it, would be Frank Tauscher. Frank was out of Tulsa, Oklahoma. He wrote the Super Traders Almanac. He basically used cycles. He used patterns, of course, ratios, of course, and he was very strong in seasonals. But he would enter these contests where, they trade paper money and to see who would win. But he always put his own money up. In other words, when everyone was trading a $100,000 paper account, Frank would always put $100,000 up. He won them all, and I think it was 4 of them that he was in, and he was the best. And I'll tell you more about him when we get back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about Frank Tauscher. He was the author of the Super Traders Almanac that he published for about 20 years. Frank passed away, about 20 years ago in Tulsa. He was walking downtown Tulsa with his son, he was teaching him the business, and his son looked around, and he had suffered a major aortic aneurysm in his abdomen, but he died instantly, and at the age of 59, a real genius. But he was one of the most philanthropic gentlemen that I'd ever met in my life. He was a Baptist, and he's very strong with his religion, but he helped so many people, and he was basically just a really all-American, devil-may-care type nice guy. He had never, he told me once that he had never uttered a cuss word, that his father was very adamant about that. But this guy really knew the business. He certainly trained a lot of great people about how to do some of the things that he did. I was fortunate enough to know him. He was the one that made the P index, the Pesavento index that Dr. Ruth Miller developed and made me take the name for it, where these planetary things come together in a bell-shaped curve. When you have a whole lot of them together, that's out at the 98% level, and when they have very few, that's at the 2% level. This has about a 75% chance of making the market move. That's very similar to what we looked at when we were talking about how these aspects line up on an aspectarian chart. You're looking at the same thing, but remember, when we first did the work on this 30 years ago, we didn't have all this fancy computer stuff that we have running around now. So that's another thing that's changed a lot. With all these computers, you can do a whole lot as far as research. And I urge you to do it yourself, because once you can prove it to yourself that you're able to do these things, it's a big advantage. So keep an eye on it. It's quite important, is what I can see from cheap seats here. Anyway, we'll be watching these markets very closely this week because of the new moon that we have coming in, and the fact that the Chinese New Year, of course, is it. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.